Now, let's talk about the one that's done the best in recent times, and that's Bank of America. So Bank of America, sometimes also known as Bank of America Merrill Lynch, because as we'll discuss, they acquired Merrill Lynch during the dark days of 2008. So that's quite a big and visible global brand, certainly in the securities and securities lending and trading arena. But Bank of America comes out of a organization formed and the result of many bank mergers in the US over a period of nearly 100 years. So it's also one of the big four in the US. The other one, which we're not talking about today, is Citibank, but it's got clients across the spectrum, the same bulge bracket activity, all of the trading, all of the asset management, all of the market making, all of the retail banking, the credit cards, and all the rest of the stuff you could possibly imagine. Market capitalization, $232.9 billion. So we've gone from 310 to 290 to 232, but that's still gargantuan by most people's standards. Price to earnings ratio 16.67, so higher than those others. Dividend yield historically dropping to 1.3, but I guess that might change in time. Graph, chart, yes, why not?
Yeah.
So it's zoomed higher, but the interesting thing is that that is nowhere near its all-time high. The all-time high for Bank of America was $54 back in 2006. So you can see they fell hard in the crisis.
Absolutely, yeah. So they really were a casualty of the global financial crisis.
$50 billion worth of fines.
Yeah, I mean, just,
Holy cow.
more than, the market cap of most of our banks in South Africa, and that's just in fines, and the business
So
is still
effectively what
intact.
that means is the shareholders are sucking up that pain, and it's because they were found to have acted improperly. And a lot of the settlements end up being paid to investors that owned mortgage-backed securities that they were involved with selling.
That's right, yeah. So some goes to the US government and some goes to the end consumers. And I guess it's the shareholders have been feeling quite aggrieved because I guess it was management's actions which to some point they were paid bonuses for have resulted in the shareholders bearing the brunt.
That was Ken Lewis. I don't know if people even remember him, but he was succeeded by Brian Moynihan, the current CEO. But Ken Lewis sort of put the bank together, and then they were a very aggressive player in those markets.
Yeah.
But look, that's probably why it's gone up the most, right? Because if they've paid the $50 billion, well, that's just a crippling amount of money, but at least it's gone, and then from here the franchise is suddenly more valuable.
Yes, yeah. So this it's up over 36% since the Trump election victory. So it gives you an idea how geared it is. Yeah.
So it goes literally from around $12 to the current price of $25 if you take that from the beginning of 2016.
So, and again, all the issues that we mentioned, it's exposed to. So if you're positive about a Trump administration, you feel that he will deliver.
How can you be positive about a Trump administration? Sorry to interrupt momentarily.
Well, will there be less regulation? Will there be increased infrastructure spending?
Will there be more tweet fights with celebrities? You're saying that's not important?
Well, absolutely. So exactly, there's noise and there's delivery. So I think, and a large part of the analysts are saying that the market is getting too optimistic about what this means, and hence the share prices are now run too hard.
Because we could crystallize it like this. If Hillary Clinton had been elected, Senator Elizabeth Warren would have been putting even more restrictions on the banks. The Secretary of the Treasury would have probably been some person like Larry Summers or someone, a sort of left-wing economic thinker. Instead, under Trump, we've got Steve Mnuchin as the Secretary of the Treasury, who's an ex-Goldman Sachs banker. You've got like 6 or 7 Goldman Sachs alumni in various positions of the US government. The Commerce Secretary is, a billionaire. The guy who's in charge of regulation is Carl Icahn, which is like putting a butcher in charge of the cow herd. I mean, it's a completely different scenario.
Yeah, so, and I guess this unusual picks, but very bullish from a business perspective, a deregulation perspective, and this is what's really feeding through.
Plus, these banks all owe Trump. I mean, Trump owes them all the money on these stupid casinos that he's got around the place.
That's look. I mean, it's a very different administration that we'll be dealing with, and I guess potentially a different investment environment.
Anyway, hot or not on Bank of
This
America?
one looks like it's run a little bit hard.
I can tell you I've got some friends who work there, and they're absolutely buckshee thrilled because their own share options have gone to the moon.
So I would prefer the other two, really. But so, I mean, I'd say not on this one because better picks elsewhere.
Okay, I'm going to tip it hot just because I like the overall context, but I can see your point. Right.